Silver is making its move. It has broken decisively above key resistance levels and risen parabolically, hitting its first upside target of 32.28. The gold-silver ratio is down to its lowest level since August, and the hashtag silver squeeze is trending on Twitter. So is there more to come, and will we see $50 silver? We're going to find out. Welcome to the Gold and Silver channel, where we help you make sense of the precious metals markets because informed investors make better financial decisions. So last week, silver was the best performing precious metal, rising more than 11%. It surpassed $30 per ounce for the first time in over a decade, and the spike that then followed over Sunday night into Monday pushed it to over $32 an ounce. It has since pulled back on some profit taking, but it remains firmly above $30. The surge in prices on Sunday night came largely thanks to buying in China, and this was then exacerbated by the news that Iran's president had been killed in a helicopter. Many of you have asked, are we seeing a silver squeeze? Because when silver made a run for it at the end of last week, it was seemingly spurred on by a return of the trending hashtag silver squeeze. The social media movement is attempting to get one over the big bullion banks, particularly those that enter into naked short positions to suppress the price of the metal. Now, perhaps we're seeing this, but it's a small part of a much bigger story. The silver squeeze, China, and the death of the Iranian president were just triggers. A lot of ground had been laid well before these events. And as usual, it's not just one thing that has propelled silver to the current price. There are three things that impact a commodity: supply, demand, and price momentum. Now, for supply, the recent surge is supported by a favorable supply outlook. Global silver mine production is expected to continue to decline this year, marking a projected fourth consecutive year of production deficit. And it's not like this is a situation likely to dramatically improve. There isn't that much silver left. Don't forget, some of the best and highest quality silver mines have been mined, cleared up, emptied. There's not much of it going. And it's not just about opening up a new mine either. It's getting harder and harder to find new, large silver deposits. But the silver supply situation hasn't had all that much impact on the price in recent times. But when you have a market which is as chronically imbalanced as this one, then you cannot expect the price to stay so low forever. And we are now seeing this make an impact. And that leads me to demand. Well, silver is so awesome that it is both an industrial and a precious metal. You can't run an economy without it. And according to the Silver Institute, the silver market balance was once again seriously in the red in 2023. Global silver demand exceeded global silver supply by more than 180 million ounces. It was the second largest deficit of the past decade. In the long term, silver is poised to benefit from increasing industrial demand. And last month, the Silver Institute's World Silver Survey projected a 9% rise in industrial demand for silver this year. And this was driven by renewable energy applications. The report anticipates a 20% increase in solar usage for solar panel manufacturing this year alone, reaching 232 million ounces. Jewelry demand is expected to grow by around 4%. So what about price momentum, number 3 on our list? Well, when we talk about price momentum, we're referring to the velocity of the price move and the tendency for it to continue to move in the same direction. And often this comes down to human behavior and how silver is perceived against the backdrop of information. Now, silver has seen remarkable gains over the past fortnight, and it appears overbought at its current levels, indicating the potential for some profit taking. However, shorting a market with the kind of momentum that we are currently seeing would require traders to either be very brave or perhaps pretty dumb. But do keep a close eye on upcoming economic data and Fed comms, as these will be crucial in determining market movement. The release of the Fed's meeting minutes on Wednesday could offer key insights, potentially further influencing market sentiment and silver prices. And as we've said, silver serves as both a precious metal and an industrial commodity. Investor behavior is often influenced by factors like the strength of the dollar or interest rates. However, there are times when silver's price aligns more closely with economic indicators pertinent to commodities, such as industrial production and GDP growth. And this dual nature of silver is evident in its strong correlation with gold, as well as with copper and the broader commodities market, which has also seen a surge. And don't forget, silver is usually a byproduct of other metals mining. And as it is an industrial metal, it is heavily impacted by other industrial outputs, such as copper, which is really rallying right now. Silver's ascent to new heights is likely a spillover effect from this overall market movement rather than a direct response to safe haven demand, despite what will no doubt be a rise in geopolitical tensions following the death of the Iranian president. And additionally, China's recent historic measures to stabilize its crisis hit property sector have supported industrial metals, including silver. And as a major consumer of silver, China's actions are crucial in shaping the metal's demand outlook. It's not just silver that is seeing this. See this tweet from Zero Hedge highlighting just how great a time it is for commodities right now. Remember, whilst commodities are valuable, generally now is a great time to own commodities, but silver is one of the few that can't easily be physically multiplied. There is no easy way to grow more silver. Once it's gone, it's gone. Hence why it's a great hedge for fiat, which has precisely the opposite problem. So could silver go higher? For all of you who are screaming at me, could silver go higher? Yes, silver could go much higher for all of the factors that we've already discussed. The break above $30 was a super important milestone for the price, and this has increased confidence in the metal. This will likely draw more bulls to the trade. Many analysts out there see little reason why we won't see it touch $35 and then $40, the longer it holds its ground above $30. So in the short term, silver prices are expected to remain bullish, driven by ongoing expectations of Fed rate cuts and positive sentiment from the broader metals markets. And in the long term, we're very bullish indeed. In relative terms, silver is still cheap, and at the time of recording, it still takes around 80 ounces of silver to buy 1 ounce of gold in dollar terms. And this is compared with this 20-year average of 68. However, if the silver price continues to outperform gold, then the ratio will become smaller, and more investors may look at silver as a good way of getting into precious metals. Given silver is both a monetary and industrial metal, you can see how silver can be a better indicator of inflation than gold is. You can't run a society without silver. Silver is a great asset to turn to when everything is booming, because very few industries can boom without silver. But conversely, it's a very good thing to have when things are more gloomy, because of its role as a safe haven in your portfolio. And with that, if you would like to learn more about the benefits of buying silver, perhaps over gold, then why not check out this video now?